Hello everyone and welcome to this session. Today we will complete the accounting cycle by doing what? By processing the closing entries, making the final step in the accounting cycle. This is part 4 of 4 in my series on the accounting cycle, where I guide you through the accounting cycle step by step from A to Z. If you are unsure where the figures are coming from, because we will be working within adjusted balances. We'll look at the adjusted balances and prepare the closing entries. Those adjusted balances are part of the trial balance, where we used in the prior recording to prepare the financial statements. So the closing entries, they come after the financial statements. What do we close? We close what we call temporary accounts. Now we're gonna see this process step by step. It's a 4-step process. By the end of this session, you will have fully closed the accounting cycle, preparing the accounts to the next accounting period, and solidifying your knowledge in the accounting cycle. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. We will work with this adjusted trial balance to prepare the closing entries. Now, if you're wondering where these numbers are coming from, these numbers are not coming from thin air. We prepare the unadjusted trial balance step by step. Step by step means transaction by transaction. We prepare the unadjusted. This is what we started with. Then we prepare adjustments. Then as a result of these adjustments, we end up with the adjusted balances. And from the adjusted balances, we prepare the financial statements. Now it's time to start the next period. And in the next period, we need to start with certain numbers zeroed out. In other words, there are certain figures that don't transfer, don't stay with us for the next period. And that's the purpose of the closing. We need to close what we call the temporary accounts or nominal accounts to start the new accounting period. So the first thing we need to identify is which one are the temporary accounts. We have a lot of accounts here. Which one need closing and which one will not? But let me give you an analogy about the closing process before we proceed. Think about going on a trip. You want to travel to Florida, or you want to travel to California or Texas or wherever you are going to. What you do, before you start your trip, you can reset your odometer to 0. And you will start your trip. Once you get your trip, you find out you traveled 144.3 miles, 144 miles. Great. Now you want to start a new trip. You would reset this odometer again down to 0. Then you will start your new trip. So giving this analogy, what's going to happen is this. There are certain accounts that need to be reset every time you start a new period. Well, which account to close to 0? Well, let me ask you this. If I ask you how much profit you made last year from your business, okay, let's assume prior year, what would you do? You will take your revenues minus your expenses and you will tell me I made a profit of such and such. If I told you what is your profit for the current year? Well, for the current year, you would look at your revenues minus expenses and you'll give me hopefully your profit for the current year. Hold on a second. What does that mean? It means the prior year revenues and expenses belong to the prior year, and the new year revenue and expenses belong to the new year. What does that mean? It means revenues and expenses, when you start a new period, they need to be starting at 0. Well, I just identified revenues and expenses. Why? Because we need to reset them. It's like going on that trip again. You need to start to measure your mileage. Profit in this situation. Same concept. Think about the analogy. Now, if I ask you, how much cash you had as of last year or last period. You would say I had $68,000 in cash based on my adjusted trial balance. I would say, okay, on November 1st, because this is October 31st, adjusted balances, how much cash do you have for November 1st? You would say, I still have 68,000. You will not close cash. You would not say it's a new accounting period. I need to bring down cash to zero. Same thing with account receivable. You have 8,000 and you would say I still have 8,000 when I wake up November 1st because I still need to be paid from my customers 8,000. I'm going to be billing them. Same thing for supplies, equipment. So notice assets are not temporary. What do we call these accounts? We call them permanent. They stay with us. Those are real account, permanent. Let's look at liabilities. Notes payable, accounts payable, unearned revenue, interests, and salaries. These are all liabilities. When you went to sleep October 31st, you had $40,000 loan from the bank. Can you wake up on November 1st and tell the bank, look, I would love to pay you, but I had to reset my numbers. Now your balance is zero. I mean, would you like to do that? The answer is yes, you would like to do that. Can you do that? Absolutely not. The bank would still want their money. Okay? So, same thing with accounts payable. If you owe your supplier, any liability you have does not go away because you start a new accounting period. So we determined that assets and liabilities are real accounts. Now, let's cover one more account, dividend. Dividend is what? Dividend is how much you withdraw from the company, from the profit. Every year you withdraw from the profit is different. So whatever you withdraw last year, you would not count that you withdraw this year. So dividend is what type of account? It's temporary. Let me make it easier for you. Tell you which one are temporary and which one are permanent. And I hope you kind of get that. What should you do? What should you do? Well, you should go to Farhat lectures. Why? To learn more about the closing process, you would need to complete multiple choice, true, false, additional exercises, look at additional lectures, look at additional resources, invest in yourself. Whether you are an accounting student or studying for the CPA, CMA, or some form of a professional certification, invest in yourself. Good luck, and of course, stay safe.